morning to all traders and welcome to this Market Insights video provided to you by Orbex. Today is Tuesday, the 25th of February, and I'm going to talk about a couple of FX minors. The first one is going to be the dollar against the Chinese yuan, and then the second one I want to talk about today and analyze is the euro against the dollar, the euro against the Aussie, excuse me. It seems that the extent of the spread of the coronavirus into numerous countries, particularly the exponential rise in cases in Italy is around 300, if I'm not mistaken, at the moment, is rising fears. As a result, of course, equities are falling, bonds, US yields are falling, and at the same time, of course, other currency pairs are dragged either up or down. Now, the USD against the Chinese yuan should have actually moved up if you consider that the Chinese yuan should be really weakening. However, haven't seen that being the case over here. And that seems to suggest, at least to me, that the PBOC has not yet injected any further liquidity. So they set the reference rate at a lower rate over the past few days, to be honest. With that being said, this seems to me from a technical perspective that this is going to be a correction, okay? Now, this correction, and since we've been actually talking about this as a minor 1 and then minor 2, this is what we talked about actually last week. Last week, actually, I was expecting this to be a W, X, and Y, just to be precise. Now, of course, following that break, and that was the case because I saw this as a correction, okay? But following the break of that level over here, then this minor 1 is definitely done. We've had done correction number 2, and we've drawn here a leading diagonal with waves 1, 2, 3, 4, and 5 done. So this is now a correction that could either take an ABC formation, which means it ended around the current level, or we could see that becoming an A, a B, and a C, okay? And that would take us down to around 7 psychological support, which is also the previous wave 1, and that would actually maintain the current structure as impulsive. Now, if we take a parallel channel here, we'll be able to see that we've actually bounced off at the previous trend line low, right? So we might have actually seen wave 2 here completed, which would indicate another move to the upside. However, with no signs on the MACD or on the RSI, we might see actually prices getting a short-term bounce and then decline a little bit lower and then move all the way up, okay? Now, that's for the Chinese yuan. Now, euro against Aussie. I found this pattern particularly interesting because I think we're going to have, I mean, we talked about this a while ago. Now, we've ended up here in the immediate wave 1, which is the 5 minor. And I think we're going into W, X, and Y zigzag, right? We've had ABC, W, X, and Y. And the current structure, which is ABC over here, right, seems to suggest to me that we're going to get a triple zigzag over here, okay? Which means that we could get prices now moving all the way up to create a fresh high for wave Z, and from there, from wave X, excuse me, and there wave Z, which is going again to be an ABC because it would be pretty much a replication of the first move to the downside, right? Now, this correction over here, okay, is where markets have been really on sideways trading, and we could get now this last wave X, okay, ending even above previous Y or even below, okay? But most likely we're going to see that becoming an A, then we're going to get a B, and then we're going to get a C impulsive. So this move is most likely going to be a zigzag, okay? And once this happens, we should also be able to get a nice bearish divergence signal on the MACD, and from there start looking for sell. So I'll be looking anywhere between 167. Of course, the duration of this could take a few weeks still to come into play. Until then, of course, there should be some more upside, but I will pay attention to where markets correct at in order to make any cautious buys.